In 2019, Donald Trump's stance on cryptocurrency was clear. He tweeted that he was not a fan of Bitcoin, calling its value highly volatile and based on thin air. By 2021, he had sharpened his rhetoric, labeling the entire industry a scam. While Trump dismissed the tech, the Biden administration was actively tightening the rules. Newly appointed SEC Chair Gary Gensler began classifying crypto tokens as unregistered securities, initiating a series of aggressive legal actions against the industry's biggest players. The regulatory pressure was intense. Within 3.5 years, the SEC issued roughly $6 billion in total penalties across roughly 100 cases, targeting companies they accused of orchestrating multi-billion-dollar frauds. Faced with these penalties, the crypto industry looked for a political exit. Backed by 50 million crypto-owning voters and a surge in corporate donations, they found a willing partner in Trump. He was on stage in Nashville, promising to make the U.S. the Bitcoin superpower of the world. Trump's promise to fire Gary Gensler on day one was the first step in a specific strategy. He wasn't just changing his campaign rhetoric, he was preparing to align the powers of the federal government with his family's private financial interests. This strategy began with the launch of a personal meme coin in early 2025. The distribution was heavily skewed. Trump businesses controlled 80% of the total coin supply. As the coin's value plummeted, leaving retail buyers with significant losses, the Trump family still generated at least $335 million through initial sales and fees. Shortly after Trump assumed office and replaced the head of the SEC, the agency shifted its policy. They published a statement declaring that meme coins were not subject to their investigation or regulation, as they did not fit the definition of a security. This sequence established a precedent where a sitting president can launch speculative financial assets and then dismantle the regulatory oversight that would otherwise govern them. The family's crypto involvement deepened with World Liberty Financial, a digital bank run by Eric and Donald Jr. To build the platform, they brought in an unusual team, including real estate moguls and former internet dating gurus. The business is structured around a specific revenue split. The Trump family is entitled to 75% of token sales revenue. This provides a direct financial pipeline, allowing investors from Singapore, the UAE, and South Korea to legally move money to the Trump family. One of the most prominent investors was Justin Sun. At the time, the SEC was suing Sun and his companies for fraud, alleging that he engaged in wash trading to artificially inflate coin prices. The timeline is revealing. Sun spent $75 million on World Liberty tokens. Trump was inaugurated. Shortly after, the SEC requested a formal pause in its lawsuit against Sun. This goes beyond a simple conflict of interest. It functions as a mechanism where a private venture allows individuals facing federal scrutiny to fund the business of the person overseeing those regulatory agencies. World Liberty Financial also leveraged its political connections through asymmetrical currency swaps. Smaller crypto companies were reportedly encouraged to buy large stakes in World Liberty at a 20% premium, essentially purchasing an endorsement from the president. This graph shows the market reaction when Trump announced a plan for a national crypto reserve. The values of Bitcoin and Ether rose sharply on the news, assets that Trump's family businesses had spent months accumulating prior to the announcement. At the same time, Trump pushed for new legislation to help stablecoins operate in the U.S. Immediately after, World Liberty Financial launched its own stablecoin, which was used for a $2 billion investment into Binance, the world's largest crypto exchange. The capital for that Binance deal came from MGX, a state-owned investment company based in Abu Dhabi and directed by the National Security Advisor of the United Arab Emirates. This creates a scenario where foreign sovereign wealth funds can directly contribute to the financial success of a sitting U.S. president through unregulated crypto markets. The impact of these ventures is clear in Trump's net worth. This chart shows that crypto assets, which he once called a scam, now account for 60%. By choosing the regulators, he ensured that his private businesses remained shielded from oversight. This system rewards a specific type of investment. It suggests that for those with enough capital, legal challenges can be resolved by funneling money into ventures owned by the president's family. By embracing the very industry he once condemned, Trump leveraged the executive branch to redefine the limits of presidential wealth. The result is a fusion of government policy and private enterprise, that changes the standard for how a president can profit from the office they hold.